Okay guys, so in this video we're going to talk about Nio Stock. So Nio Stock was up on some pretty big volume on yesterday's close. There's 126 million shares traded hands. So I thought this would be a nice time to talk about Nio Stock in this video, guys. So if you guys aren't familiar with Nio Stock, they're basically the Chinese version of Tesla. They produce EV cars. They have two models. They have an ES6 and an ES8 model. The ES6 is like a smaller vehicle type SUV, and the ES8 is their bigger model, guys. So basically, this company is a Chinese-based company, so that's one of the reasons why you guys might not have heard of it as much. It is based China, and it's run by this Chinese billionaire. So, China is the biggest electric vehicle market in the entire world. So there's a lot of money to be made in this market, guys. So if we take a look at the stock price, we can see that the stock is up 54% year to date, and it has crossed over its 20-day moving average back in late May, and they had a pretty solid earnings report. So now the stock has run up a bit, and then of course we had that pullback. So now we're kind of sitting around here, and I think the stock is a little bit up in after hours. So I've talked to a lot of you guys, and I've talked to some people, even personal friends and family. They seem to be really bullish on the stock. So let's dig right into it, guys. Whether or not I think it's a good buy at this price. So I think the first thing to do is definitely to dig into those quarterly reports, guys. So as you can see here, I'll just blow this up really quickly. This was the latest quarterly financial report. This was posted on May 28th, so it was posted a couple weeks ago. And as you can see here, in the first quarter, they delivered 3,838 vehicles, which was pretty solid. Obviously it was a pretty tough time for a lot of companies, especially, car makers like Tesla, Nio, and things like that. So basically, the vehicle deliveries were pretty much flat as they were in Q1, and as you can see here, total revenues were about 193 million. So definitely a big decrease. But guys, with the electric car market, things are very seasonal. So usually, sales start to ramp up. Towards the end of the year, so the company does still have losses and things like that, and they lost about 248 million, which is pretty understandable considering a lot of companies have lost money. So let's take a quick dive a little bit more into some of the comments that the CEO is talking about. So as you can see, here's the founder, the guy I was talking about, William Li. He's a billionaire, a Chinese billionaire. So it says we delivered a total of 3,838 ES8 and ES6 vehicles during the first quarter, represented a 3.8% year-on-year decrease due to the impact of coronavirus outbreak in China in the first quarter. So the good thing is that those sales have actually rebounded in May. So this information isn't posted in this release. Okay, so this article is posted on this website called NEVs. And as you can see here, it says the Chinese company Nio increases electric car sales in China to a new monthly record in May. The company delivered 3,406 36 vehicles, which is 215% more than a year ago. So their best seller is S6. That's the 5-seat SUV. It sells a lot better than the bigger model, obviously, because it's cheaper, and I think it's just more 5-seat vehicle. It's a lot more practical than 6 or 7 seats. So as you can see here, guys, some definitely numbers are rebounding and things like that. So that's definitely something to take into account if you guys are reading this report. So now we want to basically take a look at some of the numbers. And with this company, it's been suffering quite a few losses. That is pretty bad. So it's about $6 billion in negative retained earnings as well. So those definitely aren't the numbers that you would like to see. This company is basically burned through almost $7 billion since they IPO'd. But with a company like this, you're looking basically for growth, and you're basically looking for them to continue to build a following with their products and to recoup those losses in the future. So one of the confusing things about Nio Stock, I think, is the fact that it's an ADR, an American Depository Receipt, meaning that it trades in China. Is that we know that there was a whole Luckin coffee scandal and things like that. So it's a little tough to trust some of these foreign companies and their numbers, but we're assuming that all of these numbers are pretty accurate. So the company is currently holding around 270 million in cash, and their debt. As you can see here, we take a look at their total liabilities. Their total liabilities are about $3 billion in debt. So, Definitely not too bad, only about 1 billion in long-term debt. I think this company will be okay during the whole coronavirus situation. And they actually issued some more shares, so they have diluted this stock to kind of raise capital. As you can see here, guys, Motley Fool says Nio to offer 60 million new shares to raise cash for the China deal. The offering follows a big cash infusion from authorities in China. So basically, it just says Chinese electric vehicle maker Nio said it will offer 60 million new American depository shares, each representing one share of Nio's common stock, as it moves to raise additional funds for operating in China. So what does this mean, guys? For you guys, for shareholders, if you guys own shares in Nio Stock, well, as you can see here, they said they expect Neo China to use the cash investments for research, development of products, services, technologies, development of our manufacturing facilities, and rollout of our supply chain, operation development, our sales and service network, and general business support services. So basically, guys, they're just raising money, to just stay well capitalized. Like I said, they're not holding too much cash on their balance sheet. So as we can go back to that really, I'll show you guys exactly how much cash they're holding. They're not holding too much cash. They definitely did that to beef up their balance sheet. But here's the thing, what I don't like about this. So obviously this is a foreign company, and when foreign companies continue to issue more and more shares, they continue to dilute the stock a lot more, which means that your stock is now worth less since they've added another 60 million shares to the total shares outstanding. But the positive thing about Nio Stock is that they are selling a lot of vehicles, and they did have record sales in May. So that means as long as this company is basically going to stay afloat, that's what we're hoping to see. They should continue to make sales well into the future. I think the electric vehicle market is huge in China. That's the biggest in the world. And even though Tesla is sold the most cars in last May, I think a lot of Chinese people are pretty patriotic, and I'm pretty sure they'll support Nio as well as Tesla. So, guys, what's my take on this stock is, do I think it's a good buy now? Well, me personally, I'm a bit biased, and the reason I'm biased is because I'm Tesla shareholder, and I really like Tesla's products, and I think that they're doing everything possible to become a highly profitable company. And this company, Neo, really isn't profitable right now, and they're burning through a lot of money, and they're diluting the stock. But the good news is that the stock is on a uptrend. So if we take a look, we kind of look back from this graph, we can see that the stock basically IPO'd, back here, and it's gone down a lot. But this stock looks like it'll definitely fill this gap. So what I mean by fill this gap, it means that the price will probably eventually hit $10. Now the question is when. I'm not sure when. Really, this company is basically needs to deliver more cars and get those numbers up, and basically get more and more people into their family so they can sell more cars and provide, that long-term shareholder value, what a lot of you guys are looking at. But as a short-term trade, this stock is trending up. So if we take a look down here from where it was low at around $1.68, it's been trending up quite nicely, and that's been over basically the past, I would say, 8 to 9 months. So I think if you're to buy Neo stock, I don't think it's the worst buy at around $6. I think you could find obviously much worse stocks out there. But for me, I would just say Tesla for me is the better buy. But I understand why you guys are buying Neo. I think the shares are a little bit undervalued. So my take would be a Neo is a buy. It's not a really strong buy, but all of these electric vehicle stocks, so Neo, Tesla, even smaller companies like Solo, Ford is launching a bunch of electric vehicles next year, including the F-150. So I think all of these companies are realizing that it's 2020. We've got a lot of time left in the decade, and a lot of people are going to be introduced to electric vehicles in this time frame. So there's a lot of opportunity out there to make money. So I think Neo is a fair buy, guys. Obviously you want to use stop loss orders on this position, and you got to be patient with Neo as well. Probably going to take some time to get back to around $10. I would expect this price to return around $10 probably sometime near the end of the year. So hope you found some value in this video, guys. Please give me a thumbs up and smash that red subscribe button for more videos on stocks like Neo and Tesla. And guys, I'll do my best to give you guys as much information about this company that is a foreign ADR, which means that it's not an American-based company. It's based in China. So just be sure to be careful with stocks like these, because we saw what happened with Luckin Coffee when they were fabricating their books. The stock plummeted. So use stop loss orders on stocks like this. So that's it for next guy. Until next time, guys. Take care.